South Korea's economic transformation over the past few decades has been remarkable. From a war-torn nation in the 1950s, it has emerged as a global economic powerhouse. This success, often dubbed the miracle on the Han River, is a testament to the country's resilience, strategic planning, and unwavering focus on development. Understanding South Korea's economic prowess requires delving into its key economic indicators. These indicators offer valuable insights into the nation's overall health and stability. They provide a framework for assessing its performance and identifying potential challenges on the horizon. One of the most closely watched indicators is the Gross Domestic Product, or GDP, annual growth rate. It reflects the value of all goods and services produced within the country, providing a measure of economic expansion. Another critical indicator is the unemployment rate, which reveals the proportion of the labor force actively seeking but unable to find employment. It serves as a barometer of the economy's ability to create jobs and provide opportunities for its citizens. Equally important is the inflation rate, which tracks the rate at which prices for goods and services rise over time. It indicates the stability of the currency and the purchasing power of consumers. These indicators, along with others such as interest rates and the debt-to-GDP ratio, offer a comprehensive picture of South Korea's economic landscape. South Korea's GDP growth rate has been on an upward trajectory for decades, averaging an impressive rate over the past 10 years. This sustained growth is a testament to the country's export-oriented economy, driven by industries like technology, automotive, and shipbuilding. However, the global economic landscape is not without its challenges. The COVID-19 pandemic in particular sent shockwaves through the global economy in 2020 and 2021, impacting even the most resilient nations. South Korea, despite its strong fundamentals, was not immune to the pandemic's effects. The pandemic-induced disruptions to global supply chains, reduced consumer spending, and uncertainty in international markets took a toll on South Korea's GDP growth. Yet, the country's response to the pandemic was swift and effective. Targeted fiscal measures, monetary easing by the Bank of Korea, and a robust healthcare system helped mitigate the worst of the economic fallout. As the world gradually emerged from the grip of the pandemic, South Korea's economy demonstrated remarkable resilience, rebounding at a faster pace than many advanced economies. This recovery highlighted the adaptability and dynamism inherent in the South Korean economic model. South Korea boasts a relatively low unemployment rate, reflecting its robust economy and skilled workforce. However, the employment landscape is not without its challenges. One persistent concern is youth unemployment, which has remained stubbornly high in recent years. Several factors contribute to this issue, including a mismatch between the skills acquired by graduates and the evolving demands of the job market. The rapid pace of technological advancement, while driving economic growth, also necessitates a continuous upskilling and reskilling of the workforce. The government has implemented various initiatives to address youth unemployment, focusing on providing vocational training, promoting entrepreneurship, and creating incentives for businesses to hire young workers. However, more needs to be done to bridge the gap between education and employment, ensuring that young people have the necessary skills and support to thrive in the job market. Moreover, the rise of automation and artificial intelligence presents both challenges and opportunities for the South Korean workforce. While these technological advancements have the potential to boost productivity and create new industries, they also raise concerns about job displacement in certain sectors. Section 4. Keeping inflation in check, the role of the Bank of Korea. Maintaining price stability is crucial for sustainable economic growth. South Korea has generally kept inflation under control in recent years, thanks in part to the prudent monetary policies of the Bank of Korea. The Bank of Korea, as the country's central bank, plays a pivotal role in maintaining price stability by influencing interest rates and managing the money supply. When inflationary pressures rise, the Bank of Korea may raise interest rates to curb borrowing and spending, thus cooling down the economy. Conversely, when inflation is low and economic growth needs a boost, the Bank of Korea may lower interest rates to encourage borrowing and investment. The Bank of Korea carefully monitors various economic indicators, including inflation, GDP growth, and exchange rates, to make informed decisions about interest rate adjustments. It strives to strike a delicate balance between controlling inflation and supporting economic growth. The global economic landscape can significantly impact inflation in South Korea, particularly fluctuations in commodity prices such as oil and raw materials. As a major importer of energy and resources, South Korea is vulnerable to price swings in the global market. Section 5. Fiscal Prudence, Managing Debt for a Sustainable Future. South Korea has maintained a relatively low debt-to-GDP ratio compared to many other developed economies. This fiscal prudence has provided a buffer against economic shocks and allowed the government to respond effectively to crises. However, the country faces future fiscal challenges, primarily due to its rapidly aging population. As the population ages, healthcare costs are projected to rise significantly, putting a strain on government finances. Similarly, pension obligations will increase as a larger proportion of the population retires. These demographic shifts necessitate proactive measures to ensure the long-term sustainability of South Korea's fiscal health. The government has recognized these challenges and is implementing reforms to address them. These reforms include measures to enhance the efficiency of the healthcare system, encourage private pension schemes, and gradually raise the retirement age. Moreover, the government is exploring ways to diversify its revenue sources and create a more sustainable tax system. This includes efforts to broaden the tax base and reduce reliance on corporate income tax. Section 6. Innovation and Exports, the Engines of South Korea's Economy. South Korea's economic success is inextricably linked to its prowess in international trade. The country has a highly export-oriented economy, with exports accounting for a substantial portion of its GDP. Key export industries include consumer electronics, automobiles, semiconductors, and shipbuilding. This export-led growth model has enabled South Korea to tap into global markets, generate revenue, and create jobs. However, it also makes the country vulnerable to fluctuations in global demand and protectionist trade policies. To mitigate these risks, South Korea is actively seeking to diversify its export markets and move up the value chain by focusing on high-tech products and services. Central to South Korea's economic competitiveness is its relentless pursuit of technological innovation. The country is a global leader in research and development, particularly in electronics, telecommunications, and information technology. This commitment to innovation is evident in the dominance of South Korean companies like Samsung and LG in global markets. South Korea recognizes that maintaining its economic edge requires continuous investment in research and development, fostering a culture of innovation, and nurturing a skilled workforce capable of adapting to rapidly evolving technological landscapes. The government has implemented policies to support startups, encourage venture capital investment, and create an ecosystem conducive to innovation. Section 7. Looking ahead, addressing challenges, embracing sustainability. South Korea faces several challenges as it navigates an increasingly complex and interconnected world. Demographic shifts, geopolitical risks, and the imperative of environmental sustainability are among the key issues that require attention. Addressing these challenges effectively is crucial for ensuring South Korea's continued economic prosperity and societal well-being. The country's rapidly aging population, coupled with a low fertility rate, poses significant long-term challenges. As discussed earlier, this demographic trend has implications for government finances, labor markets, and social welfare systems. Addressing these challenges requires comprehensive strategies that encompass pension reforms, healthcare system enhancements, and policies to encourage higher birth rates. Geopolitical risks also loom on the horizon. Tensions on the Korean Peninsula, competition between the United States and China, and global security concerns can all impact South Korea's economic stability. Maintaining strong alliances, pursuing diplomatic solutions to regional conflicts, and ensuring a robust national defense are essential for navigating these geopolitical complexities. Furthermore, South Korea, like other nations, must confront the urgent need for environmental sustainability. Climate change, pollution, and resource depletion are global challenges that require collective action. South Korea has committed to transitioning to a low-carbon economy, investing in renewable energy sources, and promoting sustainable consumption and production patterns. In conclusion, South Korea's economic success story is a testament to its strategic vision, relentless pursuit of innovation, and adaptability in the face of challenges. As the country looks to the future, addressing demographic shifts, mitigating geopolitical risks, and embracing environmental sustainability will be paramount to maintaining its economic dynamism and securing its place as a global leader.